G'day, I'm Paul Erkelenz and I'm a Agribusiness and Natural Resource Management consultant. If I could say just four things about what drives profitability in a pastoral enterprise, I'd like to make these 4 points. First point is that your financial management and decision making needs to be integrated with all aspects of your pastoral business. Now by this I mean that a business is generally made up of 4 elements. Sure, there's the finances and the resources, financial resources you have to work with the business. But there are other elements too. The physical resources of the business itself, the property itself. So that's the natural resources, the land, the water and the vegetation, the infrastructure that you use to manage your property. The other one is the people itself too. Not only sort of the effort and the labour they put into the property, but their knowledge, skills and experience and their expectations in life. The final element are the enterprises itself. So the productive enterprises that you run on your property and in your business, whether it is a wool sheep enterprise, a beef cattle enterprise, or whether you're raising Dorpers and Damaras for the domestic or export markets. All of those elements need to be integrated. The decisions you make in one area of your business, for example your financial decision making, is going to affect one or more of the other elements of your business. So they will affect your natural resource management, they will affect the people side of the businesses. And it works the other way too. What you do in terms of your natural resource management will affect your financial side of the business. Second point that I'd like to make is that you've got to sort of understand what profitability is to begin with too, before we can actually just work out what drives it. When we're talking profitability in a business like this, we're not just talking about a cash surplus. You can have a cash surplus in a business in any one year and still have an unprofitable business, just simply by selling your assets. True profitability for a pastoral business is really measured on around 2 things. Firstly, what return are you actually getting on the investment or the assets you've put in the business? We calculate this and call this a return on equity percentage, and that's really your net profit divided by your net worth and multiplied by 100. And we would expect that over a 10-year period, hopefully you'd be averaging 5 to 6% to be an adequate return on investment. The second way that we'd look at profitability is basically, are you increasing your wealth? Are you increasing your net assets? You've got a lot of investment tied up in these businesses, and hopefully if you're managing your property well, looking after your land, having a productive enterprise, the value of that property and the infrastructure is going to increase over time. And that's reflected in a ratio that we call equity growth percentage, and that's looking to see whether the net value of your assets has increased over a 12-month period. The third point is that you need to understand and actively manage the key profit drivers for your business. Now firstly, what is a key profit driver? Key profit driver is any factor that's associated with either the amount of production you produce, the price that you receive for that produce, and the costs associated with running your business. And these are factors that will have the most major impact on your profitability. Some of those factors are really quite minor in terms of the impact they have. Some actually have a really big influence on your profitability, and they're the ones that we call the key profit drivers. For a pastoral business, each business is different, and you're going to need to work out what the key profit drivers are for your own business. And you can do that in a number of ways. However, there are some common ones that seem to be important for most pastoral businesses. Some of those include stocking rate. Stocking rate's a particularly important one. Yes, higher stocking rate, if you can do it sustainably and consistently, will lead to greater profit, but it's something you need to manage very carefully. Push stocking rate too far and your business will become quite unprofitable and remain so in the longer term. Reproductive rates, the amount of lambs and calves that you wean, are particularly important. For some property, adult mortality rates are extremely important too. From a cost of production side of things, the aim is to actually make sure that you minimise the cost to produce each kilo of wool or animal that you sell on your property, and that's a major driver too. What do you need to do now to improve profitability and make sure you manage those key drivers of profitability well? First thing you need to do is go home and crunch some numbers. Have a look at those indicators of profitability, like return on equity, like equity growth. See how you're performing there. But have a look also at some of those important drivers of key profitability. Some of those indicators are going to tell you how you're performing. Things like reproductive performance, things like your stocking rate, a whole range of other things that again indicate whether you're managing those key drivers of profitability well. There are many good training courses around, some online, some face-to-face. Pastoral profit workshops, a number of other things that are there. And finally, don't be afraid to use good advice, good professional support. You can sometimes find that with your accountant, with your bank manager, with a range of other people, and professional rural consultants such as myself. Quite often, you'll have to pay a bit of money, but it will be worthwhile. Good luck.